away from ongoing increases. The expectation now is that there will only be one more rate hike this year. Now that changed, but that part is good for gold. That came out of Jerome Powell's statements Wednesday. Now moving forward, the probable effects on the economy are mostly good for gold as well. If you look at all of the possible outcomes, inflation is good for gold, a recession is good for gold, and if we look at some of the events that have been popping up lately, further bank failures, well, we've already seen that that's good for gold as well, and extended conflict or even a war is good for gold as well. We've seen that too. And those aren't the kinds of things to make light of. I'm certainly not trying to do that, especially not in the war in Ukraine. But every single event to emerge since Silicon Valley Bank's collapse on March 10th has been good for gold. And every likely outcome through the end of the year is also good for gold. And that doesn't mean that we can predict its price. It's just to say that a lot has changed in 2 weeks. All of those presumably good indicators for gold, they are at least partially driven by further decline in the US dollar and bond yields. Bank failures, well, maybe that one's a little bit more complicated, but everything that we're looking at now is similar to what we thought might happen after a Fed pivot, a pivot that we've all been kind of wondering when it's coming. Now, for a hot minute, it felt like something that we're just going to have to rename, definitely something that might not be coming in 2023 at all, but really, we'd already stopped looking for an actual reversal in 2023. We were just looking for the end of rate hikes. It seems like we got the indication there would be one more quarter point hike and that would be it, but Powell made it clear yesterday that we weren't going to see rate cuts this year, so no actual pivot. Look back 2 weeks though. The spot price of gold was $18.50 and falling. The CME FedWatch tool, that was showing an overwhelmingly high chance that we were going to see a 50 basis point hike this month, and that on top of an already lagging gold price. Well, things didn't look good for gold. Prices were heading to the 1700s. That seemed to be the consensus. There's nothing saying that we're not going to be surprised by gold this year. There aren't any rules requiring it to go up, and there's no way to know what other factors could sneak up. We got a hint of that a few weeks ago with the SVB collapse, but the likelihood of new all-time highs for gold just moved up. $2,000 and up for the spot price of gold, that looks as likely now as $17.99 and down looked 2 weeks ago. The trend has definitely reversed. Before we go crazy here though, let me just be clear about what I'm saying. We're talking about an expected trend a day after the Fed's rate hike decision, a day after we heard that there will probably only be one single remaining rate increase this year, and just a week after the banking industry's worst week since 2008. It's a little early to be calling shots, definitely too early to be thinking that things are locked in. The trend is clear, but the possible surprises, they never are. If you're thinking that talk about Fed rate decisions is boring, we're here to talk about gold, well, I'm with you. It has been the primary driver of gold price, though, recently because of its impact on the dollar and treasury yields. We are at the highest rate since 2007, and the yields on treasury products are uncharacteristically high. Most of the guesswork is over now, though. We're not going to have to watch those rate hikes quite so closely. Famous last words, but the boring news really should be boring again. So let's move on. I think I mentioned recently that I've been waiting for price to drop back below $18.50, or at least prove that it would sustain current levels. I was testing $2,000 the last time I mentioned that, and I'm not sure that it's going to stay there, but $19.50, it really feels like the new $18.50 for me, based on what's happening. And I don't think that that's the floor by any means, but it's a price that I'll be open to buying at again if we see it stay there another week. So if you're wondering if we're going to see gold go to $2,300 and up, or you're wondering if now is a good time to start buying, maybe you're wondering if we'll ever see the 1600s again for gold, well, those are some really great questions that I just made up. And not really. People are asking them in general terms. They come up. I could make up some answers for those questions, but the signs for gold are mostly bullish at this point, so we can all come up with our own answers. The current all-time high for gold it's $2,075. We're really not far from that. We're about $100 off right now. And I think if you're careful coming in, it's always a good time to start buying. Just be careful. And then as a floor, and these all kind of go together. Well, I've heard people suggest the floor for gold at this point is $1,650. That makes sense to me. It's not my answer, but we'll go with it. The likelihood of getting anywhere near that number, anywhere near $1,650 right now, is just not very high. At the end of the day, the move from $1,850 up to $1,950, that's about 5.5%. It's not a huge change in the cost of stacking gold, but there's a mental shift. As prices start to get back to the $2,000 range, it starts to feel expensive. And you can see that as a positive. It definitely is. Gold is one of the top performing assets at the moment, and we're looking at a small moment in time, but that's a huge thing. Or you could look at it the other way. You could think about it becoming more expensive to buy. I know I get tripped up with that sometimes. I want to sit out runs on spot prices if they seem like maybe they won't be sustained. And that's what I mean by being careful if you're just now coming in. If we're looking at all-time high prices right now, which we're at least near it, I wouldn't totally front load my purchases. Even if I thought it was possible that we'd see an additional $100 price run this year, which I do, it could always retrace at some point in the future. We saw that happen in 2013. But that's the biggest thing that's changed here. We went from experiencing a crazy spike based on a crazy banking catalyst to a move that seems instead like a step up in the base value of gold. We're certainly seeing the trend. I think the floor has increased as well, but that doesn't mean we're not going to see dips. If I was going to sum all this up, I would say everything changed for gold. Again, we saw the momentum build up at the beginning of the year and then just kind of fade off. We saw it do a 180 with the bank failures, and now based on the policy decisions that are at least partially affected by those failures, it's no longer a simple spike. It's looking like it's a trend that's going to be playing out for a while, probably taking us into the latter part of the year that most analysts already thought gold was going to do really well in. So on the downside, purchases might cost a little bit more, but on the upside, gold seems to be making more sense, doing what it's supposed to be doing. So let's call it good there. Let us know what you think, where you think we're at, if you think we'll see new all-time highs, and then how that affects your buying. Are you speeding up, slowing down? Maybe you're holding steady. Hit us up in the comments, let us know, and then while you're there, be sure to hit the like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time.